Alright, we're going to work a problem at the end of chapter 2. It's on page 106 if you want to follow along. It is S2-4, Journalizing Transactions. And this problem says that Ned Brown opened a medical practice in San Diego and had the following transactions during the month of January. So I'm going to show you how to journalize a transaction. This is just an Excel spreadsheet that simulates what a general journal would look like. We're going to list transactions in chronological order. So let's just get started. This is pretty straightforward. On January 1st, the business received $29,000 in cash and issued common stock to Brown. So the first thing we're going to do is date or journal entry. I really don't know what year it is, so we'll just say January 1st. And you always list your debit account first. So in this situation, the company is receiving cash. Cash has got to go up by $29,000. And since cash is an asset, you're going to increase an asset by debiting the account. So anytime you receive cash, you have to debit cash. That's a good rule to remember. We got $29,000. And we sold common stock. Common stock is an equity account. And you increase an equity account by giving it a credit entry for $29,000. So you can see we listed our debit entry first and then our credit entry. And then we're going to give it a short explanation. We'll say we received cash from Brown in exchange for common stock. Okay? So let's move on to our next transaction in our list. On January 2nd, it says we purchased medical supplies on account for $14,000. So it's January 2nd. We received an asset called medical supplies. Right? We're going to receive benefits from these supplies in the future. We're going to need to debit medical supplies because it's an asset account. And anytime you want to increase an asset, you have to debit the account. So the amount of medical supplies we purchased was $14,000. We didn't pay cash for them. We purchased them on account. So that's going to create a payable. Name it accounts payable for $14,000. And then we'll give it a brief explanation. We purchased medical supplies on account. And this is considered good form for making a journal entry. You list your debit account, and then you make an indentation and list your credit account, and then you give it a brief explanation. You also have to make sure that when you're finished with your journal entry, your debit side equals your credit side. And you see that's the case. We have $29,000 here and $29,000 here, and then $14,000 and $14,000. It's pretty simple when you only have one debit and one credit, but sometimes you may have multiple debits and multiple credits, and you always have to check that out to make sure your debits equal your credits. Let's go to our third transaction. On January 4th, let's see, the doctor performed services for patients and received $1,400. And we received cash, so we've got to debit cash. And the amount of our debit is going to be $1,400. That's how much cash we received. And we performed services, so we need to credit a revenue account. So every time you earn revenue, you need to increase revenue by giving it a credit entry. So we earned revenue of $1,400. And our brief explanation will just be that we performed services for patients. The next transaction happened on January 12th. we paid monthly office rent of $2,600. Okay, so now we have a type of account we haven't used before. We have an expense account. We're going to debit rent expense. An expense occurs because you use up an asset. And in this case, we're using up cash. So we have rent expense of $2,600. And anytime you give up cash, you have to credit cash. So we're going to credit cash for $2,600. And our brief explanation can be that we paid the monthly rent. And it looks like we have one last transaction, January 15th. We recorded $8,000 in revenue for services rendered to patients on account. So now, instead of receiving cash for our services, we told our patients that they could pay us later, and that's going to create a receivable. Okay, so we didn't receive cash, we generated receivables. So our debit is going to be to accounts receivables. It's a debit, that's an asset account. And we created $8,000 of receivables because we performed $8,000 of services. So anytime we earn revenue and we need to increase revenue, we have to credit revenue. And our explanation is that we performed services for patients on account. So this is how you make basic journal entries. And this class is a lot about learning how to do journal entries. We'll do them in every chapter. So if you want, go through problem S2-4 again, work the solution, and see if you come up with the answer that's in your solutions manual.